Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I'd like to go over the Bitcoin chart because of course it does lead the market and show you where we've been, where we are, and where I think we might be going. Just very briefly because I think that there's a lot of nervousness in the atmosphere today and this week, especially about the upcoming month. And that's due to, of course, seeing almost all of your altcoins having bled to death. They're all like 80 to 90% down. And a lot of you are probably feeling pretty rugged right now if you haven't been following this channel and understanding what I've been saying for months about what the crypto market would likely be experiencing. So let me just go ahead and flip on some graphics for you. Of course, you can see just in this selection of Bitcoin's life, which is back here from 2017 all the way to present day, these kind of wedges that we form. And of course, you can see this one lasted approximately 400 days. This one lasted approximately 475 days. And we've been in our current one for approximately 483 days. Well, these wedges don't necessarily mean that you're going to skyrocket. Sometimes they do break down. Case in point, 2018. When this broke down, it was extremely traumatic, and our current setup is almost identical to 2018. Hate to break it to you, but that's just the facts. If we take a look at the this next one and just shorten its timeline to be more similar to this wedge, you can see it also was wedging towards this area. If you just take a look at this direction of this pricing right here, it was getting wedged in this direction. It did manage to have a last minute pop up, and that was ultimately just a complete fake out as it came crashing down even before the COVID dump. You can see it turned around before COVID. And the smart money just knew the writing was on the wall. We had a severe crash. So, of course, this wedge also led to a crash. And then the Fed and the Federal Reserves all across the entire world injected free money into the market. And so that free money spurred this bull run with 0% interest rates, and stimulus checks, and just billionaires and businesses getting handouts from the Trump administration in the trillions of dollars, money that they don't pay back. They have no obligation to pay back. I have no idea who thought that was a good idea, but for some reason the Trump administration just dumped trillions of dollars into the market. And of course, this is backfiring us in terms of inflation. The current president, of course, continued those policies. Washington obviously has a spending problem. Europe also does, and the rest of the world followed suit during this emergency. So, what happened? We got a bit of a bubble, just a bit of a bubble. And as all bubbles do, this one might more likely pop than pop up. I know there's a lot of hopium that it could pop up, but we have to be realistic. The free money is gone. There's the war in Ukraine. Supply chain issues are still lingering, and China is cracking down once again, making supply chains even harder. And of course, just all of this stuff is converging the inflation. So they're fighting it by increasing interest rates, which means not only is the free money taken away, but also now there's a penalty on regular money in order to try to stave off inflation so that we don't have runaway inflation, so that we don't have stagflation. And so that's where we've been. So, and of course, that general outlook is where I think we might be going. But let's just go ahead and take another look at this, because you might not believe me. You might say, okay, well, we're getting at the point of this wedge, and maybe we're just going to skyrocket, right? Maybe we're just going to skyrocket. Let's go ahead and flip to another chart. Well, one thing that you can see is that this movement right here that we're experiencing is actually very similar to the overheated one that we had in 2018, and not that one in 2019. 2019 was actually in this blue zone. These are the alpha origin channels that I made up. Of course, I was very dissatisfied with the origin line that I found being used on YouTube. I just don't think it's that useful, or if it's just useful for one guy who, maybe if he explains it better, I'll have some idea. But I just don't think that origin line makes a lot of sense. I think it makes more sense to compare the Bitcoin price to the price of the stock market. I think the stock market trend actually predicts the Bitcoin outcome far better than those type of origin lines. And then we also, of course, have like those rainbow kind of logarithmic curves that you've seen out there. Those stock to flow models, those type of things. And the problem is that because they're on curves, it's just very hard to use them. It's very hard to use them. You have to use mathematics. And so I've made a compromise between all these things that I've seen out there, and I brought in these different levels. As you can see, our current price action, right above this kind of midline, is exactly identical to the price action that we had in 2018. And then also we had overheating at the very top, just like we had in 2018, except our blow off top was a little bit delayed, right? They added it to the second hill. Like if you take the extra points on this area compared to this area, if you take those extra points and put it up here, you had the blow off top, right? You had the blow off top, it was just delayed. Okay, sneaky, sneaky market makers. We had our blow off top, and now we're having our correction, just like 2018. Why would they want? Why would they want to make it seem like it's not 2018? Because you would trade. You would trade with the knowledge of this setup already in your mind, and by making it look completely different, they can get you. They can get you. They can make you think something else is happening. They can make you think that this movement is similar to this movement and that we're going to skyrocket, when in reality, this movement was just a delayed blow off top, and that we only have had this so far, which means that the most likely outcome is going to be this fall. And for that fall, I'm targeting this area, right? And how can we take a look at that in a little bit better detail? Well, we can go ahead and throw on our trusty Gaussian channels, which I use the same principles that a guy named Crypto Crew uses. I probably learned this from him like back in 2017 or 2018, and I just hadn't even given a second thought. I rediscovered it by watching Crown. Crown does not believe in it, but I've actually created an entire video on how to use it properly. And I just don't think that this is a tool that Crown uses regularly the way that that I'm using it. And so I outlined in that video how to use the Gaussian channels for the best trades of your life in order to help you understand, that it's not just about red and green. And I think also Crypto Crew like kind of emphasizes red and green like a little bit too much, which I think that's where uh, Crypto Crown's reaction is coming from. But I hope you guys watch my video on it because it's very enlightening and I go into detail that just other guys do not. But as you can see, we're retesting the bottom of this Gaussian channel. And so we're sinking down in this tar pit, and our most likely next stop is, of course, into the ocean, right? Like we're about to dive off the cliff into this ocean. And you can see that this lines up, on the same parallel, the same diagonal that I have drawn out here for the previous price action from 2018. That's a lot of confluence. The possible blow off top, right? If you like add this and this together and like put them in here, right? That extra blow off top like would have touched the top of this red strip right here, right? This diagonal, right? It would have been perfectly matched with it. And so this setup is very, very similar. It just has a little bit more of a wave because of that second bump. And that's how they confuse you. That's how the market makers deceive you and confuse you and make you think something else is going on when in reality we have a parallel situation. And of course, that suggests that we're going to break down into this area because everything up here is a bit overheated. Everything down here is a pretty good value. And that's the beauty of the alpha origin channels that I've created here. So let's just go ahead and move along because I think you see the point. I don't think I need to explain it. I was explaining this stuff when we were up here, just tipping our toes onto the middle line, and people were like, "That's crazy. You're just a perma bear. What are you talking about?" No, guys, if we break that midline, we're going to be exploring the bottom of the Gaussian channel, and if we get our foot touch our foot onto the bottom twice, we're most likely going to get stuck there and eventually fall over. I told you that months in advance, and I wish some of you had believed me, and instead you chose to get wrecked and to wreck other people. But okay, now that we're all caught up, at least we can be on the same page. And being on the same page, we can go ahead and switch over to weekly, turn off those channels, go ahead and put on our EMAs, and you can see, sure enough, the EMAs are lining up with this kind of moderate blue zone in here, which if you take just a little bit of a parallel, right, can extend on a horizontal level right over here to this green area, which is approximately 22,000, and this one, which is approximately 27,000. So somewhere between 22 to $27,000 is probably a reasonable expectation if Bitcoin does end up spilling its guts and coming back to this green, really good buy zone. And of course, if I turn on regular price action, right now I have this kind of like a line graph, but if I turn on regular price action, you can see we also get wicks into this area. And so if for some reason we dip down into this area as low as like 14,000 with a maximum theoretical low of 12,000, which I do not think that will approach, but hey, it could happen. It happened here. This is on the same diagonal. You know I'm a diagonals trader. I don't like screw around with these things. So EMAs and diagonals are a very powerful tool together. And you can see this entire setup. It makes perfectly logical sense, whereas other things just would confuse you, right? The uh, the stock to flow model would just confuse the heck out of you. These kind of like wacky, like arbitrary, origin lines that some people try to draw. I mean, it just confuses you. They're actually using other tools. It's just the line is a good estimate because the stock market has generally just gone up in those times. But as the stock market decides to turn around, let me go ahead and put on the stock market over here. As the stock market turns around, you're going to find out that kind of straight line that we used to have, it just doesn't play nicely during these time of turnaround points. This kind of, quote unquote origin line, which is just being essentially transferred over to Bitcoin. You see this line? This line is basically being transferred over to Bitcoin in a very generalized way because Bitcoin follows the stock market. It's basically a meme tech stock, okay, guys? Like the guys who run the stock markets have taken over Bitcoin. But as Bitcoin corrects, right? I mean, as the stock market corrects, and if we go deeper, then this line no longer makes sense. And so if we take a look at our chart over here, of course, same thing as the stock market. You could have just drawn this line, just be very general about it, right? You know, you can jury rig it however you want, just lining it up with the bottom here in 2018, 2019, and just saying, oh, hey guys, I found a master origin line. No, BS. This is just the stock market like pumping because of all of that free money and because of all of the policies of the US president since back here. And if the stock market turns around, then this model just completely disappears. What are we left with? We're left with support levels, and these support levels in a proper origin channels methodology would show you where you would want to buy and which zones you would want to target. Boom, boom, boom. Okay, this makes sense. The other one does not. The other one is a good shorthand if you have nothing else to use. But hey, I can superimpose the stock market, right? Let's do the NAS 100, right? I could superimpose the stock market over this chart, and then I have absolutely no need, right? I have absolutely no need whatsoever for any type of like, origin lines or whatever, because I can figure out what's going on just based upon this price action. And I can show you what that looks like if you want to straighten this out, right? You can see that as we zoom into these areas, they start to follow each other very closely. And while Bitcoin is a very serious distortion of what goes on in the stock market, you can see that more or less any one section like basically follows stocks, right? Here's the pump, here's the pump, here's the trend, okay? Just keep going back and keep doing that. And eventually you can just analyze every section. Oh, hey, there's the COVID dump. There's the COVID dump, almost identical. You just line it up. I'm being very sloppy here, okay? And so, of course, you can draw these things, and it's much more accurate than using any type of origin line or anything like that. You'd rather just use the stock market, right? It just makes much more sense. You don't have to pretend there's some arbitrary line, okay? Just to brag about something like that. Eventually, you need more nuance, and to be honest, it's the other tools that are more important. But in terms of making channels and making DCA points, I want to show you how this can be valuable. Because if we look at the price action, how Bitcoin price action has just sat on these diagonals, and tell me I'm wrong. Okay, tell me I'm wrong. Sitting on the diagonal, sitting on the diagonal, sitting on this diagonal, sitting on this diagonal, sitting on this diagonal, or sitting below that diagonal, sitting on it, sitting below it, sitting above it, sitting below it, right? Sitting right here, consolidating. All these levels have been incredibly respected, and so this alpha origin channels model is incredibly useful if you want to DCA on the way down. Where would I DCA at? I would DCA. You could technically DCA right here. You could DCA 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 all the way down until you get to that kind of like potential mega traumatic area, right? If we dump. And so these channels actually have functional use. I am not just making this thing to tickle my ego or try to make some BS up. If you had followed that, on the way up, you know, uh, in this flash crash, you can see consolidation right here. 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 I am not making this up, right? In this one, look at it. Oh, look at this candle right here, right there, right there. Of course, this was a traumatic drop, so you would want to wait until we bounce. You don't want to just buy, right? In the middle of it, you want to wait until we bounce, and look where we bounced. Right there, there's a consolidation area. Where'd that wick go? Right here, consolidation area. Where'd this candle go to? Right there, consolidation area, right? And then on the way back up, we retested here, retested here, retested here, here, and here, right? Look at that, perfect, absolutely perfect. These alpha origin channels are the real deal, guys. This is the real deal. You can choose your DCA levels based upon my alpha origin channels. This is a tool that I've created to help with DCAing down on a traumatic fall. This is a tool that I've created. Do you understand? I put a lot of thought into this. Some people were making fun of me for this earlier when it was in the more sloppy form because it was just an idea in the works. But I think I've almost perfected it. Of course, is perhaps a little bit of refinement that can go into it. But now that we're looking at it closer to its final form, you do see that not only do you get the benefit of seeing on the same diagonal where you could possibly DCA in for the best buy of your lifetime, assuming that we get there, but you also have every level in between where we are right now and that point should we not make it there. And then if you want to buy on the confirmation, let's just say you're just too scared to buy the drop, you think it could go even lower, then you could buy on the climb back up, right? Because these would still be relative values. You can buy on the drop down or you can buy on the climb up. And this is riskier because it may turn around before you have a chance, to get that bottom. But it really doesn't matter. Once you're in this blue zone and once you're in this green zone, it's a relative value. What this alpha channel, these alpha origin channels show you is that we do have major consolidation areas in the blue. And so it wouldn't be too surprising if we did drop down here, consolidated for like a year, and then fell down, perhaps dipping our toe into this green area, and then rocketed up, whenever that might be, 2023, 2024, 2025. But this tool is incredibly good, and I think that I'm going to be using it more and more in the future. And if we have this traumatic event, it's going to be the one reliable tool that is out there that can tell you where to DCA at when nobody else can tell you, but I can tell you. And if we do have a blow off top the next time, you do know the areas to look out for. Okay, like this is done right. This is done right. Just throw away those other origin lines. That's useless. It's totally useless in our current situation. There's nothing more than you needed than the Gaussian channels and your EMAs, and then these diagonals. Okay, like everything else is just BS, to be honest. Let's go ahead and turn this off because I think you get the point on there. And I'm just tooting my own horn a little bit. Sorry about that. But of course, I wanted to show you just the rising wedge that we had been in. And rising wedges have a tendency to break down, and so it wasn't surprising that we broke down. I had been warning and warning and warning about this area for months, that when we approached here, we were likely to break down. And I want to prove it to you. I want to prove it to you by just showing the fib channel here, right? So anytime we've gotten to these fib channels, these are fib lines. We've broken down, and it took a long time to work our way back up. And this one we broke down, and it took a long time to work our way back up. We broke down, and then it took a while to work our way back up. Broke down all the way down here, and it took a while to work our way back up. Same thing here. I told you, expect to break down, and then who knows when we're going to break back through this. It looks like we're kind of putting in a similar type of formation as up here, or right here. And so it could take a while. I mean, this also has the potential to be something like this, so don't get caught off guard, okay? But if we do start to break down, just consider that something like this might be happening, if we don't get that massive pump. But that massive pump needs to come soon. And what else did we have? We also had these horizontal fibs, right? So if you look at the horizontal fibs, then you could see that this would be a very good bounce zone to get rejected from. And if I just flip this chart, right, you would say, oh, this is a really bullish chart. Look at this. Look at this. Oh, just a healthy retrace, and then we're going to go, right? Unfortunately, that's an inverted chart. And so by inverting the chart, you can kind of see it more than if you're just looking at the regular price action, because your own bullishness might bias you. And I've seen 10-year traders, get biased in this way. And, unfortunately, we didn't validate above that area. So as soon as we broke down off of this kind of golden pocket for rejection, right? As soon as we broke down, we should have actually considered just to sell right there, which I was warning everyone to do so. So I warned people to sell here at 59. I suggested people to buy here at 36, and I suggested people to buy right here at 37 when we caught support, and then on the confirmation of it, and then to sell here. So these are the 4 calls that I've made. I've never made any other calls. Sell here, buy here, buy here, sell here. And I also gave a strong warning. I gave a very strong warning, and all of this is documented. I gave a very strong warning that what we were seeing in this point right now, everyone said, oh, V-shaped recovery, we're going to the moon, blah, blah, blah. Moon boy BS, buy into everything because it's your last chance to buy it. Yeah, no, I'm sorry. We got rejected by the 200 EMA. The EMAs do not lie to us, okay, guys? Like, this was predictable that we were going to break down there. Same thing here, breaking down. This was just like the two things. I think I even sent a, DM to my friend Crypto Reda, which I suggested, hey, this looks very similar to summer. I think we're going to get rejected here. And so it's good to talk with your friends about those things. You can kind of put your heads together and figure out what your next step is. But of course, we came back down, and then I suggested to buy here. And so, yeah, so maybe this call, this call, this call, this call, this call, I was pretty sure because we still had this same orientation as here. And then I was wondering about this. I didn't make a call here, so I won't claim it. But and then this call, I absolutely made that a call. Everything else, I just had validations and invalidations. But I think those calls were enough to make anyone who took them seriously extremely wealthy. Of course, I'm always a little bit nervous about trades. I'm highly conservative. I don't gamble. And I have certain responsibilities. So I have to make sure that I manage my money. And so I don't necessarily take even my own calls, which is a shame because they're becoming extremely good. I messed up. Um, I actually did call this top at 53, but I messed up in that I stayed in my position. I was just so bullish. I didn't control my emotions. I knew that we were going to get hit here. I called it to my entire group. Like that was a call that I made. And then I kept my position open, and I have no idea why. Just dumb mistake. I make mistakes. I'm not trying to say like I'm perfect or anything. I made a dumb mistake. And everything that I made here, I lost just in this drop. That's how fast prices get decimated on the way down. And then down here, I was thinking I put too much trust in I put too much trust in a YouTuber who is much more experienced than me. And he was saying certain things about on-chain data. I won't say his name because I don't want to hurt his reputation. Saying certain things about on-chain data, which ended up proving not true. And so I was too bearish right here. And then I just saw things explode and I got in a little bit late. I locked myself into some IDO tokens and things like that, which I didn't have good experience with. And so even now they're locked up, and I lost some money that way, even as my other trades did really well. So look, I'm not perfect. I make a lot of mistakes. I'm confessing my mistakes even as recent as this area. But that these mistakes and also, losing some money up here because I just wanted to believe that we were going to the moon, is what inspired me to make this channel. It's what inspired me to try to help to protect other people. I've earned my scars, which is what my friend Retta says, like you've earned your scars. And once you've gone through it, then what can we do but share our wisdom and try to do better? So now it's incredibly important that I get this right. And I've been spot on every step of the way because I have earned my scars. I have earned the right to talk about this stuff now. I have done deep analysis and I've put in the time and the very hard work to understand what I was doing sloppily as I just took for granted this bull run and this free money that was injected, into the world by the Federal Reserve, during the Trump administration, just printing trillions and trillions of dollars ridiculously, unaccountably, just just ridiculous. It's just created this era of inflation, which is what sent the markets down. And so we are being screwed by our own governments. And I still believe in these crypto assets as a possible way to make money in the future. But we do have to remember that it is tied to the stock market. And as they try to correct for inflation, now that there's been just so much free money put out there, as they try to correct for inflation, as they try to correct for those overheated stock markets, crypto is going to be temporarily affected. And so this is where we were. But of course, as soon as one formation breaks down, the next formation forms, right? And so we had a falling wedge forming after that rising wedge. And a falling wedge does have a tendency to break to the upside, just like a rising wedge has a tendency to break to the downside. And all of these formations are more or less BS, okay? It's like you're trying to see shapes in the clouds, okay? Like they're all more or less BS. But you can understand that as price action consolidates, it has to go somewhere, either up or down. And if you've been going down for this long, most likely you'll go up. So that's the logic to it. That's the logic to it. And it's just, honestly, this is what we're doing between like this range. Okay. And this is where the smart money is interested in buying. This is where the smart money is interested in selling. And if they're interested in buying again, it's going to be at the bottom of this range. It's not going to be anywhere in the middle. Any shape that you see in here is just complete BS. All right. Patterns traders, they're just complete BS. But it does work often because it's like it's like putting doodles on this price movement and having a visual instead of a mathematical calculation. It's just a visual calculation of, well, in all statistical likelihood, if we have gone down this much, probably we're going to have an up move eventually, assuming we're trading this range, right? And so it just comes down to statistical likelihoods, which is why some people can be highly successful with those methods, but it never has to go that way. This can break down. And especially if the support of the channel is down here, it even may break down, okay? It may break down. This pattern would work much better if it was pointing directly to support, and then off of support, that long may make more sense. And then these kind of diagonal channels, to be honest, this is just a trend, but a trend isn't the same thing as supply and demand zones. That's why I said I'm not going to call diagonals support or and resistance anymore. I'm just going to call them trend, right? Because we want to make sure that we understand that there are, supply and demand zones that are being operated on. And we have one here. We have one here, we have this, right? And so we have like all these different zones, and then to another extent, we have like this one here, right? So like this has never really been retested. And if we do something like this, potentially, we could come down here, test this again. Who knows, you know? So don't be fooled by these shapes. These shapes can kind of trick you also. But we are making this formation, which does have a higher likelihood of breaking to the upside, even though we could continue to the downside. And this is within the overall context of our death cross, which, some people are using the 89, some people are using the 100, the 200. It really just depends on what timeline you're looking at. I'm looking at the 3-day because that has been very useful for other reasons in terms of this macro analysis, particularly because we can talk about the 200 being support. And whenever you have a squeeze play with the 200 EMA in the works, the 200 MA and 200 EMA, which is the orange and the white line, and whenever you have a squeeze play with it, it's always a very powerful move. And so if you can see that 200 on one of these time frames, then relative to that time frame, that's the key point, relative to that time frame, it's going to be a very powerful move. Now, this is the 3-day. So a 3-day is even more powerful than a 1-day, right? And so that move to break a 200 EMA on the 3-day is very powerful. Now, other guys, they're using like the 89 and the blah, blah, blah. Well, okay, you can use that, but how many people really understand how price action moves on the 89? Okay, it's the exact same thing. You see this? See this? 200 and the 89. It's the exact same thing because these are multiples of each other. They're just basically copying what I'm saying when they're pointing out this 89. It's just that you can talk about the power of the move based upon the 3-day, and you can't see it. You can't see it on the daily. So this is the daily. You can't see what's going on. But if you move up to the 3-day, here's the 2-day. You can't see it on the 2-day either. You can just see that you're well under the 200s. The first time that you can see it is on the 3-day, and that keeps our calculations the most simple, and it also means the power of the move is the most obvious on this 3-day chart. And then we can go ahead and take a look at, you know, things like how our volatility is kind of like building up down, lowering down here, and eventually it's going to spring. For volatility, I believe that Crown looks at the 5-day, and that's going to look something like this. He hasn't been calling this one right at all. Like he's been getting it totally wrong, because I think that what we're looking at is a major, major move. And so, because this has to do with the entire world economy. It's not just Bitcoin going through a little cycle. This is the entire world economy. And so what I proposed is that we actually look at it at the 2-week. And if you see, it's just been lining up perfectly with my 2-week chart. Here we are. We're reaching that maximum threshold. The monthly is also a possibility, and that's very scary. If this could come down a little bit more on the monthly, it's going to be terrifying, to be honest. But I think the 2-week is scary enough. And I had projected that we would meet at this point. Back here, I projected we would meet at this point, and look at what we're doing. We're meeting at that point. What does that align with? That aligns with the apex of this death cross on the 3-day. And so I have 2-week volatility flooring at the same time that I have a death cross on the 3-day. So a power move is coming in. A power move is coming in. And unless we escape that, this is where we are. I showed you where we were. I showed you where we are and the risk that's involved with that. The risk that's involved with that is that we come down to these weekly 200 MAs. How do I know that? Because the same setup existed over here, and we came down to the weekly 200 MAs. All right. Well, that's quite a ways down. It's 27,000 to 22,000. And where have we heard that again? Of course, those were levels. Those were levels on the alpha origin, right? The alpha origin channels over here. This level and this level, or this level and this level, depending how this curves, right? And then if we get a wick down, maybe here, or if we just consolidate, just around that area, then maybe down here. So this is kind of the target, but you should also consider to perhaps DCA on the way down, just in case we do have a softer rounding, than we expected, right? Maybe it only just barely skims the top level up here, right? Or maybe even down here, and maybe, who knows, like we could be at the bottom already. But you just want to be aware that if we put all of these theories together, including um, the death cross on the 3-day, breaking that 200, breaking that 200 EMA has never been a small thing. Anytime Bitcoin has ever broken through the 200 on a squeeze play, it's always been a powerful move. So if people tell me this is the bottom already, I don't believe them. I don't believe them because we're already broken down under the 200 MA, and we're hanging by a thread on the 200 EMA. That volatility is still building up on the 2 weeks chart. And so what could I see? Maybe something like this, intensifying and then pow, right? Or maybe even here, pow, anytime now. So where can we go? I just showed you down, but the other direction that we can go, which we have to be open-minded to, specifically because we do have that falling wedge, right? We have that falling wedge, which I told you can break to the upside. We have to consider that we might bounce to the middle, and if we can break out above that, maybe we can find support and avoid this death cross. This is our last resort, our last resort. And then that 2-week volatility might push us upward, in which case the bull run could suddenly flip over. And all these markets are momentum. When volatility is that low, a shift in momentum to one direction can just push everything that way. Push everything that way. Market makers have a very easy time shaking out markets in low volatility. Traders want high volatility, but these market makers can really take advantage of low volatility. So we have to keep that option on the table. And what would that look like? It would look like this, where we escape the midline of this death cross, and then we grab the top of it, taking out these highs. And then we grab the top of this area at 47,000. So basically 44,000. Let's call that 45,000. And then 47,000. And then maybe we can work our way up to the 50s, where if we can get above 47,000, I'm going to be super bullish. Okay? Because the volatility that's being built up could launch us. It could just launch us. But if we can't break the midline here, and if we can't break the top of this wedge, which again corresponds to those EMAs. See all these EMAs? See this blue one here? You see this purple one? You see these ones up here? They're pushing us down. They're squeezing us down. We have to get above them. Let's go to the daily. And here on the daily, you can see how we're being influenced and why these boxes make a lot of sense. The 200 MA right at 47,000. The 200 EMA right at 44,000. We have to get to 45,000 to escape this death cross. We have to get to 47,000 to have any chance to turn this 200 MA up. Otherwise, these are crossing negatively. Let me just turn everything off. Otherwise, these 200s are crossing negatively to the downside, and price action is being squeezed under them to the downside. You see how that works? It acts like a deflector shield. Anything that tries to get through this just gets deflected. It's getting deflected down. If we can't pump. If we can't pump to 44,000 and then very quickly get to 47,000. And we have to do it like now. We have to do it within the next week or two. We have to do it now in order to avoid this fate. I'm not kidding around, right? Not kidding around here. It is possible. It is possible. I'm not making a call here on this one. I'm creating validations and invalidations. Once we have the cross, then I'll make the call. And if that cross comes up, I'm going to be right. And there's nothing anyone can do about it. But right now, we still have a chance. We still have a chance. All right, guys. Sorry to be a little bit, on the negative side there, but of course, we do want to make sure that everybody is protected. We don't want anyone to get hurt. And so, of course, as we take a look at the market, we have to be super realistic. And that was your alpha for the day. Stay safe and happy trading.